Good afternoon and welcome. I'm Ali Amdad, and on behalf of the National FinTech Center at Morgan State University, I'd like to uh, welcome all of you to this webinar. Today's webinar is um, the culmination of the work of several people, and I want to thank all of them. Uh, Today we gather at a remarkable moment, a moment that is uh, very important when rules governing money, markets, and financial access are being rewritten in real time. Cryptocurrency and blockchain technology are no longer concepts reserved for technologists or Wall Street insiders. They're fast becoming infrastructure of many global financial systems. And the policy decisions being made right now in Washington, in state capitals, and in boardrooms across the country will shape who benefits from that system and who gets left behind. Here at the National FinTech Center, our mission is clear: to ensure that students, researchers, and communities, uh, especially those who have historically been underserved by traditional finance, are not just observers of this transformation, but active participants and leaders in it. That's exactly why today's conversation matters so deeply. We're joined today by three outstanding professionals from Coinbase, a leading global platform for cryptocurrency. Uh, they sit at the very intersection of technology, regulation, and community impact. They bring perspectives from federal policy, state level advocacy, institutional research, and grassroots community engagement. This is your opportunity to hear from the people who are shaping the future of digital finance and to understand what that future means for you. Our first panelist is Joyce Kazadi, who leads the democratic engagement at Coinbase and advances policy solutions shaping the future of digital assets and financial innovation. Before joining Coinbase, she built a career as the highest levels of government and politics. She served in senior leadership roles across Congress, presidential campaigns, and national institutions. Her work has focused on navigating complex policy environments, building coalitions, and driving strategic initiatives at scale. She is especially committed to expanding access to financial tools for underserved communities and to helping the next generation build wealth through informed, confident participation in the evolving digital economy. Please join me in welcoming Joyce Kazadi. Joyce, the crypto policy conversation in Washington is evolving very quickly. What key federal developments should students and future professionals be paying attention to at this moment, and why do they matter?
Well, thank you so much for that warm introduction and for hosting us. I'm really excited and privileged to be having this conversation. Um, I would just say, honestly, we are in one of the most important moments that this industry has seen in regards to policy in Washington. For years, the conversation was mostly reactive, people asking whether crypto should exist or whether it could be trusted. And now we're seeing a shift that we're moving into a more serious phase where lawmakers are asking how we can regulate this responsibly and how America stays competitive. So, with that in mind, I would watch out for three things. First is how stablecoin policy gets implemented. As many of us know, last summer the president signed into law the Genius Act, which was stablecoins, which is backed by the U.S. dollar. But right now it's being implemented. And so that could reshape how payments and money moves. So that's one key area I would watch. The second is the market structure legislation. So that is the lion's share of the work that I'm currently involved in. It's happening in real time right now. And what it really is about is just creating clear rules for the road so consumers are protected and innovation can happen here in the US. And third, I would watch the broader conversation around national security, fraud prevention, and consumer trust. And this matters because policy shapes where jobs go, where investments go, and ultimately who gets to participate in the future economy. So those are the areas that I would watch, especially as someone who's interested in this field and is currently in school, as the conversation is taking shape right now.
Great. Um, there is a growing discussion around the stable coins. You mentioned it briefly. Also, market structures and regulatory clarity. Why do these policy debates matter beyond Washington, and how could they affect everyday consumer? Could you elaborate on that?
Yeah, that's an excellent question. I think ultimately, because at the end of the day, policy is personal. And if you're not in the room or engaging in with lawmakers or stakeholders, then you're likely on the menu. And so that is something that I've carried with me throughout my entire career. And I think important, it matters more than ever right now in the stage of the world that we're in terms to stable coins and market structure. Um, these debates, they happen in hearing rooms and committee meetings, but the impact shows up in real people's lives. So, for example, if payments become faster and cheaper, that matters to families sending money abroad, right? If there are clear consumer protection, that matters to everyday people deciding who you can trust. That matters if innovation gets to stay on shore in America. That matters for jobs. That matters for entrepreneurship. That matters for opportunities. And like oftentimes these language and these conversations can seem really abstract, but ultimately it boils down to cost, access, fairness, and trust. And so it matters far beyond Washington. And I think it's imperative that everyone get educated on what's going on. And you don't have to be an expert, but you should plug in because even if you don't do politics, politics ultimately will do you.
Mhm. How can blockchain technology create new pathways for economic opportunity, entrepreneurship, and wealth building in historically underserved communities?
Now, that's a great question that I care deeply about. I think historically, many communities have been locked out of wealth building systems in America, and that is like the big friction point with traditional finance. We have like 6 million underbanked folks in the US. And that is real. If you think about communities that don't have access to fair lending practices, don't have access if they have a great idea but can't get backing, or if you can't, open up a bank account. A lot of communities don't trust the banking system, and so they keep their money themselves. And you think about the folks who send money through Cash App or Venmo versus, traditional banking systems. Um, and ultimately, it creates barrier to ownership. I think what excites me about the blockchain is the potential to lower some of these barriers. A young entrepreneur with talent and a laptop can build something globally. Someone can move money faster and more affordably. Uh, People can access new financial tools without needing the traditional gatekeeper's permission. And so we're talking about instantaneously. And I think that's really important. Um, you're talking about something that, when you're building on the blockchain and when you're transferring funds on the blockchain, it's you're just a number. It's just cryptography. It removes barriers of race, gender, age, all those discriminating factors that are inherently a part of the systems in the world and society we live in disappears on the blockchain. So that is really really, really exciting. But I want to be clear that the technology itself doesn't like absolve or solve inequality. It's going to take education and smart policy and intentional inclusion. And so that's why conversations like these are really, really important. But I do believe if we get these pieces right, the space can help widen opportunity in a meaningful way. And that's why like institutions like Morgan State matter so much, because you have talented folks already here on this call who are excited and are interested and are following the policy conversations.
Mhm. Great. Thank you for giving us that national perspective. Now let's uh, move to more state level. And our next panelist, Katie Ann Searcy, leads the state level policy across key markets at Coinbase. And her background brings a unique and powerful lens to the question of what it means to get policy right at the state level. She previously served in the Biden Harris White House, including as chief of staff to Mitch Landrieu in the Office of Infrastructure Implementation, and as director of special projects for the deputy chief of staff supporting execution of landmark legislation, including the bipartisan infrastructure law, the CHIPS and Science Act, and the Inflation Reduction Act. She has also held roles at Stripe and worked on Hillary Clinton's campaign. And in her personal office, uh, she holds a BA in Peace, War, and Defense from the University of North Carolina, Chapel Hill. Um, and we're delighted to have Katie Ann with us. Please welcome Katie Ann. Uh, what would make Maryland a pro crypto or pro innovation state?
Well, thank you so much for having me and for all the folks on the line who joined us. So, when you think about states, it's a little different than how we think about federal policy. One thing that we're really working for is to make sure that these states don't block out innovation before it even starts. So, making sure that regulation is fair and is easy to implement for entrepreneurs and founders to be able to come to Maryland and start their businesses. There's very like nitty gritty policy we can talk about. And some of that is, Joyce mentioned stablecoin implementation in states, which Maryland has taken steps to do. We also look at other pro crypto legislation, such as unclaimed property. Again, these are like very nitty gritty. I don't expect anyone on the line. And then the other big thing about Maryland is staking legislation and the right to stake your digital assets in Maryland, which you are not allowed to do right now. There are also other innovative ways for Maryland to show that it's pro crypto. So accepting tax payments in crypto form. We also look at, incredible examples from Maryland. Mayor Scott and his solicitor Ebony Thompson they have actually used blockchain technology to put vacant lots in Baltimore on the blockchain. They've seen a 25% reduction in vacant lots over the last few years, which is really incredible. But it's showing how, an innovative technology can change people's lives, which is very exciting.
Yes, as a matter of fact, we had a webinar with Ebony Thompson, and it was a fantastic informational session. Um, they're leading actually in an area that not many other municipalities are going in that direction.
Absolutely. And even leading across the country. They're not just in Maryland. They are the leaders there's no other city doing that, and we're seeing it kind of being rolled out. And Baltimore was the first city to do that.
Right. Very good. What would you make? What would you uh, think that would make Maryland a pro crypto or pro innovation state is a very good start. Um, but there's a push to clarify that staking isn't a security. Why is that important for Maryland residents specifically?
Well, it's important because they're losing out on money. But I think just to take a step back, what is staking? And staking is when you have a digital asset, you can put it back on the blockchain. And when you do that, it strengthens the blockchain and you receive rewards based off that interaction. What's wild is that Maryland is an outlier. Maryland is only one of 4 states where staking is not allowed. And currently, Maryland has lost out on $9 million of revenue. And that is like directly to the consumer. So people on this call that hold digital assets are not allowed to stake in the state of Maryland. There are, some very like legal technical terms of why the securities commissioner believes this to be in Maryland. But again, it's only 4 states. And so we want Maryland to be pro innovation, and this is a very easy step forward where staking can be allowed. So we are hopeful that in the next legislative session, this passes and Marylanders are allowed to stake.
Mm-hmm. Would you address the this session, legislative session in Maryland? There were 7 or 8 bills that were introduced, and they were all related to blockchain and crypto. And I think there was 1 or 2 that specifically addressed staking. Would you address the importance of that and compare it to other states?
No, I mean, I think it is so incredible that over the last session we had almost, I think it was 9 crypto or blockchain technology legislation bills introduced, and I think 3 of them passed and will be signed into law. What's really great about those pieces of legislation is all of them were positive and moving in the right direction. We are really seeing from lawmakers their willingness to understand this technology, understand that it needs fair regulations, and to put those into place. And that's coming from the governor's leadership. And his team has worked really hard to make sure that the regulators at the Maryland level are open to understanding innovation and welcoming innovation into the state. I would say that's pretty high compared to other states. We're seeing, 1 to 2, maybe 3 bills in other states be introduced, and Maryland had 9. So it's really exciting. Obviously, not all of those passed, but bills take more than 1 session to get passed if you've never worked in the legislative process. But the fact that Maryland had so many bills, it is clearly a focus for these policymakers and for Marylanders to want these to be, into state law, and so that companies can come and individuals can come and entrepreneurs and be pro crypto in the state of Maryland.
Mm-hmm. Great. What should students who are interested in crypto policy or jobs in this space be paying attention to in Maryland right now?
Well, I think you should encourage your policymakers to support staking as a service, not a security in Maryland, just because that is money being left on the table. But also being part of the economy. I think it's a really important push. The more people that use crypto and the more people who are expecting it from their businesses and push the people around them to use it, the more it'll be adopted and it'll become easier for everyone to use. So if I was a student interested in crypto, I would, be joining webinars like this and interested, but I would also be building my own tools and understanding, what goes into the blockchain and how I can implement that into my community.
Great. Thank you, Katie Ann. Let's move to our next panelist. Darren Carter is someone whose story will resonate especially with our students today. Darren Carter leads community engagement on the US policy team at Coinbase, a role that puts him at the center of connecting crypto um, advocates with policymakers across the country. But what makes Darren's story compelling is the journey. In his 6.5 years at Coinbase, he has worn many hats, from information security to social impact to policy. Before Coinbase, he held cybersecurity and risk management roles at EY and Salesforce, and he transitioned to tech policy in 2021, leveraging his technical expertise to bridge the gap between technology and regulation. Beyond his professional work, Darren is passionate about uh, mentoring emerging talents and advocating for diversity and inclusion in tech. He's he actively supports initiatives aimed at bridging the digital divide and fostering educational opportunity for all communities. Please welcome Darren Carter. Darren, what advice would you give to a college student today if they're looking for ways to get into blockchain or crypto? Skills, conferences, resources to follow, any insights?
Awesome. Dr. Amdad, thank you so much for having us today. I want to echo the sentiment of all my other colleagues as well. It's a pleasure to be here with the group. I think Morgan State does a phenomenal job of being a leader in this space. So excited to have another conversation with the audience today. And for the students that are listening today, I want to let you know that there are tons of opportunities in the blockchain space. This is an emerging technology that obviously has garnered attention at the federal and the state level. And I have 3 pieces of advice and then some other resources for you all to also consider. I would say, first and foremost, the tools are out there and available today. If you're interested in the blockchain, please get on chain today. Don't just read about it. Don't just be out there on Twitter. You got to be in it to win it. And the easiest way to be in it is to actually download the tools. Let's say you go get Coinbase Wallet, purchase a few dollars of a crypto asset, send it to a friend, mint an NFT, use a stable coin for a purchase or send it to someone across the border. These are all ways to get familiar with the technology and how I originally got into crypto years and years ago. The technology was the only barrier to entry because it was such a new and emerging field. And the people that had expertise in the field were actually more people who had the experience. So I would encourage you to go play with some of the tools. I highly encourage all of us to use the new Base app. It's a lot of fun, but there's a ton of options out there as well. So if you're not on chain, make sure to get on chain today. Be a real user. The second thing I would say is you can pick a lane, but stay curious. A lot of people think that crypto is this niche field, but if you look at a company like Coinbase and all the other emerging companies that are out there, they need people in policy. They need people in engineering. We need people in business development, marketing, community, research, you name it. So whatever your strengths are, make sure to go deep on that, but layer in familiarity with blockchain technology and crypto, but also bring your expertise to this field because you don't need to be an expert in crypto to be effective in crypto. You all have superpowers in your own zone of expertise that are going to help the crypto industry mature. And then there obviously are some people that are technical experts when it comes to blockchain and smart contracts, and that's their zone of expertise. But if that's not yours, there's still a ton of opportunities out there. And then the final piece that I would give, and I think this is unique to both crypto and AI and other emerging technologies, is this mantra of building in public. If you start a Substack, or if you post on Twitter, or you're consistently writing and publishing what you're working on, you're going to start to find community is gravitating towards the content that you are publishing, and you're also kind of like building an online reputation, or an on-chain proof of participation that's going to actually let you stand out amongst other peers who are trying to compete for these same jobs in the blockchain field. And it's kind of become a characteristic of crypto to build in public, especially on Twitter. So if you're not on Twitter, or you don't have a Substack or anything like that, I would encourage you to start that. And that's just like a good habit for this next era of employment, in my opinion. And then finally, if you're looking for resources to follow, I have a few outlets for you all to consider. Bankless does a great job of doing like long form podcasts. They also have a newsletter that they publish. Blockworks is another outlet. The Block. And then, of course, make sure to go to Coinbase, because we have a number of resources as well. So I think if you go to coinbase.com/learn, there's a ton of resources there. There's a few links where you can actually go subscribe to our Coinbase newsletter. And then finally, make sure to go visit our Coinbase Institute page, because we publish a ton of thought leadership about future trends. And that's a great way to stay at the cutting edge of what's happening, because our team is just cranking out thought leadership left and right. So if you're constantly reading that, you don't even have to be too concerned about like fully understanding everything. It's just the repetition will build awareness, and eventually that awareness is actually going to convert to true, affluence in the field. So I would encourage you all to, follow some resources, get on chain today, and really just like think about your zone of expertise and where you fit into the broader crypto ecosystem.
Mhm. Great advice and information for our students. Thank you, Darren. What are some of the emerging trends that you're watching right now?
It's a great question. I think by a show of hands, everyone here has heard of AI. AI is like the word of the year. Years ago, it was blockchain and crypto that also kind of captured the same enthusiasm. And I personally think this is the year where you start to see agentic commerce meet crypto. At all the conferences that we've gone to, and all of our thought leaders in the crypto ecosystem are saying that agents are going to need a way to transact with each other. They're going to need some system to transact value. And funny enough, crypto, or cryptographically based tools, are a great way for AI agents to interact. So I would say we're actually entering an era where blockchain and AI are starting to merge, not only just on the financial piece, but I think as we go forward, we start to see more and more AI generated content. There's going to be a need for a trust layer. And what does blockchain do really well? It tracks provenance. It's a great trust layer. So I think we're also going to need to see blockchain, start to show its worth as a trust layer for AI generated content, or even securing and verifying certain data that's out there. So blockchain does a great job of all of that. Another thing that you've probably all heard of is stablecoins. Joyce had alluded to it earlier, but the Genius Act has kicked off this rush into stablecoins, because with this regulatory clarity, you see everyone on the financial stack getting interested in stablecoins. So I'd say right now the market is, let's say, roughly 200 billion, but you're going to see that over the next few years, probably honestly 10x. So if you want to understand crypto in an easy way, I always recommend that people start with stablecoins, because a stablecoin is a digital dollar with the superpowers of the blockchain and the internet, but the stability of the US dollar. A dollar is a dollar is a dollar. I can send you, Dr. Amdad, a stablecoin right now, and you'll receive it as a dollar, and we can pass that back and forth, and it will never lose value. In the traditional banking system, as we all know, if we're trying to send money back home to family, or even just transacting with each other, there's always a cost for that. So with those transactions, financial institutions have been eating away at literally at your dollar. Now blockchain helps solve that, and stable coins are the method for all of that. And then my final piece here is you'll hear a lot about tokenization. And what is tokenization? That is taking assets that exist outside of the digital space, representing them digitally, and then securing them on a blockchain. And that last piece is really, really important because today we can represent things in digital form, but when you put it on a blockchain, that allows you to actually secure ownership and provenance of that asset, which allows for all types of opportunities. One example that people might be really interested in is tokenization of real estate. So in New Jersey, Bergen County has gone through this process of tokenizing, I want to say it was over $200 million worth of real world assets, real estate, putting it on a blockchain and allowing fractionalized ownership of that. So if there's a $1 million property that one individual does not have access to, you actually have the ability to go in and get fractional ownership of that. And if you look at how wealth has been built traditionally in the United States, it's through capital. It's through access to real estate, it's through access to capital markets. It's not just labor. So previously, that high barrier to entry was boxing a lot of communities out. And with tokenization, you're actually going to find that it's a tool that will democratize access for all communities.
What are you most excited about, Darren? All of these are wonderful technologies. They have their own use cases, and they help in various ways. But
Mm-hmm.
it would be interesting to hear your own personal preference and what do you pick if you were to pick one of these?
Well, I'm about to jump out of my seat with excitement because the state of Maryland has really been leading on this. Katie Ann alluded to it before, but the city of Baltimore has really stepped out as a pioneer in the blockchain space and has actually implemented this blockchain meets real estate project. And I'm going to drop a link here so everyone can see what I'm talking about. But they've tokenized over 200,000 properties on the blockchain. They published it on their city website, and now anyone can go in and they can look transparently at the properties that exist across Maryland. And if you click in, there's also a proof of that transaction on the blockchain. This makes things more and more efficient, and this actually converts to the results that Katie Ann was alluding to of greater housing inclusion, transformation of housing and real estate. So these are the real world projects that are being implemented today. And then Joyce earlier was talking about stablecoins. I really do think that stablecoins are the best opportunity for anyone who's new to crypto. I'm here in New York City right now, and in Brooklyn, every bodega has two prices. You have the cash price and you have the card price. That's because it's expensive to accept money. These Visa fees and these credit card fees are eating at the margins of small businesses. And unfortunately, they're charging that obviously back to the customer. But with stable coins and crypto technology, you're allowing these small businesses to transact with digital cash, and you're allowing everyday people to transact with the convenience of digital payments. Obviously, there's more work to be done to mature that infrastructure, but I really do think that blockchain is going to make an impact on small businesses, and it's going to make an impact on real estate. And I'm excited that Maryland is leading in all of this.
Mm-hmm. Mm-hmm. Very, very true. Thank you for those insights. Now, let's talk about some of the most challenging moments you've had as someone pioneering a new technology, and you've helped a lot of others. What helped you overcome those challenges?
Yes. So everyone on the call who's been a panelist today has seen the ups and downs of crypto. I think it's unique because it's an emerging technology that is also tied to personal, to finance. Um, And we're living through the emergence of digital assets as an asset class. And with that, like, you see these ups and downs, you see technical breaks, you see the immaturity of the industry at times, and those can be challenging. I think a trait for people who are trying to enter this field is resilience. You absolutely need to be resilient in the face of all of these challenges. Some things that were challenging were working with policymakers that were extremely skeptical or held misconceptions about crypto. So years ago, it feels like a distant past, but years ago, the industry as a whole was under the shadow of some other major incidents. I'll even say FTX, right? Like that's one of the major incidents that has caused a lot of consternation. Very challenging for the rest of the industry, but this was not a failure in crypto per se. This was a bad actor operating in the shadows of regulatory uncertainty, and almost emphasizes why the United States needs to work with policymakers to put clear rules of the road on the books so people can interact with this safely. So I see policy as a feature and not a bug. And sometimes you see innovation outpace policy, but thankfully we've gone through the challenging times and we work with the policymakers to educate them about the technology. And now they're more open to a common sense framework for regulating digital assets that's going to create more opportunities for consumer protection, but also will protect the innovation, because there are not only just the big companies like Coinbase out there, but there are hundreds and hundreds of founders, not only in Maryland, but across the United States and even globally, that are using digital assets to build companies and like contribute to the economy. And they also benefit from clear rules of the road, honestly, probably even more so than a big organization like Coinbase that has the resources to operate at all levels and all across the globe. So I'm excited that as a community we're working through some of those challenging moments, and there are issues that happen in crypto that create honestly a public conversation about what do we need to implement in order to prevent this in the future.
Great. Darren, for our students who are looking for entry positions in this space and potentially at Coinbase, what does it take to work at a company as fast-paced, dynamic, and challenging as Coinbase?
Yes, I would say I'll give you a ton of advice here. I'll start with one, which is applicable probably to any job that you want from 2026 and beyond, and that is AI fluency. That is something that we've recently emphasized and built into the framework for any new hire. But we want people who are fluent in AI and can use the tools effectively to supercharge, our efficiency and our output, and really help take the team to the next level. So although it's not purely crypto, I would say AI fluency is one of the biggest skills that's going to position you well, whether you're applying at Coinbase or any other job. I'd say from a personal level, a bias towards action and an ownership mentality is something that's going to help you at a high-paced startup, or I guess we're no longer a startup, but high-paced company like Coinbase. We really emphasize having a bias towards action and doing something, even if it's imperfect, because action begets information, and that information is going to allow you to make better, faster decisions in the future. So get out there, get active. We've already talked about the resilience that it takes to be in crypto. I think that's unique to our industry as well. It's such a fast-moving, high stakes because of the financial aspect of it, and global industry that you really need to be resilient. And then finally, I'd say stay curious, because there's something new to learn in the industry every day. So, when I started years and years ago, tokenization wasn't a topic of conversation, but now it's something that G20 nations are talking about. Stablecoins honestly had been here for years and years, but now we're really starting to see traditional financial institutions lean into it. And then now, we live in the era of AI agents, and now agentic commerce is going to be another commentary to watch. So stay curious.
Great, wonderful. Thank you so much. Let's change a little bit and have some conversation. I'm going to pose a few questions, and anyone on the panel can answer. If you could change one thing about how crypto is being regulated in America right now, what would it be and why?
I'll just jump in really quickly. I think the low-hanging fruit answer here is that we need a federal framework, and we just don't have that right now. So clarity, I think I saw a question in the chat. Do I think Clarity Act will be passed this year? And so the Clarity Act, for those who don't know, is just the phrase, the name of the bill for market structure. We need clear rules of the road. And I think that without that, you'll see the kind of the situation that we're in now, where no one really knows what's happening. And then you have a 50 patch framework, which I'm sure Katie Ann can attest to that it's not great, because what happens in Maryland is very different than what happens in California, Virginia. And it's just like you're moving from across state lines and the rules change. And like if you're building, that's really hard for a developer. And, as Darren was talking about, for folks who are trying to get into, the next frontier of jobs is going to be on chain, AI. And it's hard if you're now preparing for that future and looking at these developers and they're shipping jobs overseas because it's just too difficult to sustain a business and to scale a business in the US under the current political and policy environment, so I would say yes, because too much time is spent navigating like uncertainty, and it doesn't help anyone. It doesn't help consumers, innovators, or regulators. So this is my pitch for strong rules of the road and accountability. And like I mentioned, that it takes up majority of my day. I am actually on my way to the Hill right after this to speak with some lawmakers and staffers and policymakers on how we can keep this moving forward. And so I am hopeful. I do not have a crystal ball. There are a few hiccups in terms of if we can get this across the finish line. And I will say those kind of fall into some buckets with rewards. On our platform, we offer rewards, like basically an incentive program for folks to come on chain and to, trade funds and store crypto on our platform. And, that is in direct competition with the banking industry. And so they're trying to say that will create deposit flights, which will, harm local communities. But, in our research, we have found that there's no basis for that argument. So that is one issue. I will say another issue is definitely like just with DeFi and consumer protections. Lawmakers, rightfully so, want to make sure that as we are building and building fast, that consumers are protected. And sometimes there's a tension point. As you are a developer, you may not, it's the argument of should you be held responsible for what happens with your product later? And so I think we just need to find a middle ground there, and we're working on that. And then lastly, the conversation about ethics, should elected officials be able to profit and get rich off of this while in office. And so those are some of the issues. And hopefully if we can resolve that over the next few weeks, we will see steps to getting market structure passed. So I am hopeful, but it's still a bit of an uphill battle that we're working out daily.
Great, thank you. Next question, again, anyone can answer. There are 65 HBCUs in our network. These are institutions that serve communities with significant generational wealth gaps. What is the single most important policy change that would help those communities benefit from the crypto economy?
I'm also happy to jump in as well. And then, I'm sure Darren and Katie Ann would add to it. But I would just say, access, real access, and not just to the technology itself, but to education and trusted information, and entrepreneurship pathways, and ownership opportunities. I think too often communities with wealth gaps are invited to lead into the conversation or used as a talking point, as oh, Black and brown users are the rapid growing adopters, but like, what does that mean when you pull back the layer? Are they supported? Are they actually benefiting from this? Or are they able to, scale? And so I think that oftentimes we see folks get in after the value has already been created and there's really nothing left. And so we want to be able to stop that pattern. And I think there's an opportunity here to do something different. And I think you really have to pair the innovation with education. And so, institutions, that's why HBCUs are so important to this conversation. So you're not on the sidelines of it, that you are taking ownership and shaping the policy conversation in real time.
Mm-hmm. Great.
And to add on to that, Joyce, I'm so glad that you were describing like the need for us to be leaders in entrepreneurship, and just innovation overall, and the fact that even if it's not like a explicit policy change, we need to build into the culture the fact that we're here and we're at the table, and without education, there is no access. So the HBC University network has a huge role to play in exposing students to this cutting edge technology, because we're watching this become an asset class in real time. And that alone is a huge wealth creation opportunity, but we need to do it responsibly. And education is the foundation of that.
Mm-hmm. Fantastic. Darren, since you have the floor, crypto has had very public failures, some very significant, FTX, Luna, and others. When those moments happened, how did you explain them to communities you were trying to bring into the space? And did it change your approach?
That's a great question. And I think my approach is honestly, you can't sugarcoat it. Like these are very real and significant incidents. And on the other end of those incidents are people, real people with real money who experienced real losses. And that's a breach of trust. So how we've obviously modified our approach is education first about the technology. When it comes to FTX, this was not a technology failure. Again, this is an offshore company engaged in nefarious activity that resulted, unfortunately, in these losses. But there also, in the crypto industry, have been situations where there has been a technical failure that leads to a learning for the rest of the industry to say, hey, we need to implement these X, Y, or Z controls to continue to build trust with the community. But we've changed our approach to lead with education, to emphasize that we're building trust first and not trying to talk about the hype and the opportunity of blockchain and crypto. And I think it's also helping to emphasize that blockchain as a technology is not just inherently financial, and that building expertise in this industry can be done without a ton of financial risk. And there are safe ways to interact with the technology. And again, that's why education is so important, because in such a fast moving industry, people will flock to what they see online and not necessarily just a trusted outlet like a Coinbase that can give you the tools to interact with the ecosystem safely. So even to back up to an example that we were sharing earlier about staking, I think, what is it, 47 other states allow staking as a service. Staking is a very technical implementation of the blockchain. Even someone like myself who's familiar would need a lot of capital and a lot of technical resources in order to benefit from staking, which would give me yield. Companies like Coinbase have a staking as a service product, and others have a staking as a service product that allow users to interact with this safely without the burden of worrying about configuring it perfectly or making some technical mistake where you've lost all of your assets. And the nature of the blockchain is that it's irrevocable. So once a transaction is published widely across the blockchain, there's no other entity that you can go to for any recourse. So that emphasizes or even just increases the importance of finding trusted partners that can help you on your crypto journey. And if you feel ready and if you want to, you're absolutely welcome to go out there and do this alone and do this by yourself. But there's no reason that we should be banning safer opportunities for everyday users to benefit from the assets that they already have.
Mm-hmm. Great. And with that, we come to the close of what has been a truly exceptional conversation. To our panelists, Joyce, Katie Ann, and Darren, thank you. Thank you for your time, your expertise, and your genuine commitment to making the world of digital finance more transparent, more equitable, and more accessible. Your work matters, and today you have given all of us a clear window into the opportunities and responsibilities that lie ahead. To our audience, whether you're a student exploring your future, a researcher examining this space, a professional navigating this evolving landscape, or simply curious and trying to understand what is happening at the intersection of technology and finance. I hope today's conversation has sparked something in you, a question or an idea, or a next step. At the National FinTech Center at Morgan State University, we believe that financial innovation must be inclusive, that the next generation of blockchain developers, policy advocates, and community leaders can and should come from every background and every zip code. Today was one step in that direction, but it will not be the last. We invite you to stay engaged, stay curious, stay connected to the National FinTech Center because we have much more in store for you. Our next webinar is on the horizon, and you will not be, you don't want to miss that. Basically, I want to invite all of you. Keep an eye on our various channels for the announcements, and be sure to share today's conversation with a colleague, with a classmate, or anyone who needs to hear it. I'm grateful to Veronica Hash of the policy team at Coinbase for her leadership in coordinating this panel. I thank Amanda Ihegbe, our center's program manager, for coordinating the outreach also. On behalf of everyone at the National FinTech Center at Morgan, thank you for being here today. This is your space. This is your moment. And I wish you a wonderful afternoon. And with this, we end the session. Come back and visit us. Thank you all.
Thank you, everyone.
Thank you
Pleasure
so
joining.
much.
Thank you.